What if I told you that while the world is distracted by the latest political drama and the daily roller coaster of the stock market, the wealthiest 1% are quietly making a massive bet on a single metal that most people have completely forgotten about? They aren't talking about it on the evening news, and they certainly don't want you to know why they are draining the world's physical supply at record speeds. We are currently standing at the edge of a massive economic shift, and by the time 2026 rolls around, the financial landscape of the world could look unrecognizable. Welcome to Wall Street Metals, where today we are pulling back the curtain on why smart money is moving out of the dollar and into silver before the 2026 financial crisis hits. Before we dive into the data that the big banks don't want you to see, do me a quick favor. If you want to stay ahead of the curve and protect your family's future, hit that like button and subscribe to the channel right now. It helps us keep bringing you this critical information while there is still time to act. To understand why silver is the ultimate silent play for 2026, we first have to look at the massive cracks forming in the global economy that most people are ignoring. For decades, the US dollar has been the king of the mountain, but that throne is starting to crumble. We are seeing a perfect storm of record-breaking national debt, persistent inflation that won't go away no matter what the Fed says, and a global movement to move away from the dollar in international trade. But why 2026? Many of the world's top economists and psychoanalysts point to 2026 as the year when the chickens come home to roost. There's a famous economic theory called the 18-year property cycle, which has accurately predicted almost every major financial collapse for the last 200 years. If you look at the math, the peak of the current cycle lands right around late 2025 or early 2026. This is the moment when the massive debt bubbles in real estate and government spending are expected to finally pop, creating a liquidity crisis that will make 2008 look like a walk in the park. Smart money investors, the hedge fund managers, the family offices, and the billionaire insiders aren't waiting for the crash to happen. They are positioning themselves right now. And while they do own gold, they're increasingly obsessed with silver. Why? Because silver is the most undervalued asset on the planet today. If you look at the gold to silver ratio, which is simply how many ounces of silver it takes to buy 1 ounce of gold, you'll see something shocking. Historically, that ratio was around 15 to 1. Throughout the 20th century, it averaged around 40 or 50 to 1. But recently, we've seen it hovering at 80 or even 90 to 1. This tells the smart money that silver is essentially on sale compared to gold. They know that when a crisis hits and people panic buy precious metals, silver historically outperforms gold by a massive margin because the market for silver is much smaller and more volatile. When a little bit of money moves into the silver market, the price doesn't just go up, it explodes. But there is a second, even more important reason why the elite are hoarding silver, and it has nothing to do with coins or bars sitting in a vault. Silver is the indispensable metal of the modern world. It is the most electrically conductive, thermally conductive, and reflective metal on Earth. You cannot build a modern economy without it. Think about the massive push for green energy. Every single solar panel requires a significant amount of silver. Think about the electric vehicle revolution. EVs use nearly double the amount of silver that a standard gasoline car uses because of all the extra electronics and battery connections. Now, think about the explosion of artificial intelligence. AI requires massive data centers and high-end semiconductors, all of which rely on silver to function efficiently. We are entering a period where industrial demand for silver is skyrocketing at the exact same time that the world wants to use it as a safe haven asset. This is what's known as a double squeeze. And the smart money knows that the world is currently facing a massive silver deficit. For the last several years, the amount of silver being mined has been significantly lower than the amount of silver being consumed. We are literally eating into the world's stockpiles, and those stockpiles are not infinite. If you look at the reports coming out of the COMEX and the London Bullion Market Association, you'll see that physical silver inventories are dropping to levels we haven't seen in decades. While the paper price of silver, the price you see on your phone or on the news, stays relatively suppressed, the physical reality is much different. The big banks have been accused for years of using paper contracts to keep the price of silver low so they can accumulate more for themselves at a discount. But you can only play that game for so long before you run out of the actual metal. In 2026, when the financial system faces its day of reckoning, those who hold paper promises may find that there isn't enough physical silver to go around. This is why Wall Street Metals emphasizes the importance of understanding the difference between paper wealth and real, tangible assets. When the music stops in 2026, you don't want to be holding a piece of paper. You want to be holding the most essential industrial and monetary metal in the world. Now, let's talk about the 2026 de-dollarization event.